Hey everyone, welcome back to Corporate Decoder, the place where we decode the often confusing language of corporate filings. Today we're diving into a report from Momentus Inc. and things already seem a little turbulent, almost as turbulent as a rocket launch gone sideways. This report is from early March 2025. The main event, a change to the terms of a loan they took out the previous year. So back in July 2024, Momentus got a loan from a company called Space Infrastructures Ventures, or SIV for short. They called it the July 2024 note. As of early March 2025, Momentus still owed about $1.4 million on this loan. Now, what's interesting is what the company decided to do with this loan that they took out. The big change is about the price at which SIV, the lender, can convert the loan into Momentus stock. Initially, the conversion price was set at roughly $7.41 per share. But now, Momentus has agreed to lower that price to $2.12 per share. That is a huge change in share conversion price. This lower price is only good until the loan is completely paid off. Why would Momentus do this? Well, it likely incentivizes SIV to keep the loan in place, as conversion at this new, lower price could be more attractive if Momentus's stock price rises above $2.12. In simple terms, it gives the lender a better chance to make more money if they convert the debt into stock. This also means it allows SIV to acquire a larger stake in Momentus, which could worry existing investors. Why would this worry investors? Because it could dilute the value of their shares. It is never a good look when companies are slashing share prices like this. Okay, let's dive into the implications a bit more. What does this actually mean? First, it suggests that Momentus might have been having some difficulty repaying the loan under the original terms. Agreeing to a lower conversion price is a way to make the loan more appealing to SIV, encouraging them to be patient and not demand immediate repayment. It's like saying, hey, we're struggling a bit, but we'll give you a better deal if you stick with us. Second, this move could signal that Momentus doesn't foresee a big jump in its stock price in the short term. Otherwise, they probably wouldn't be so willing to let SIV convert the loan at such a reduced rate. Let's talk about the company itself a bit so all of this makes sense. Momentus Inc., despite its ambitious goals, has faced a series of challenges. The company aims to provide transportation and other services in space, including deploying satellites. This is a tough industry to get into as there is a high barrier of entry. They want to provide transport in space. But let's cut through the space age promises for a second. Momentus is burning cash like a rocket burns fuel. When companies are in early stages like this and trying to disrupt an industry, they will need a lot of money to keep the lights on. Let's talk about some more clues we can see here in the report. Momentus has its Class A common stock and warrants listed on the Nasdaq. The fact that they are listed on the Nasdaq means they want to be taken seriously as a public company, but can they back it up? A lower conversion price could worry existing investors because it could reduce the value of their shares. That is not good. So what's the takeaway here? Momentus made a deal to essentially try and keep a lender happy. It could come at the expense of existing shareholders. The fact that the company needs to take these kind of actions might indicate that it is not performing as well as they might want to signal. The company direction overall is questionable. On one hand, they are trying to be proactive and solve issues by restructuring debt. On the other, a lowered share price can signal a lack of confidence. Momentus faces significant risks common to the space industry. These include the high costs of space travel, technical failures, and intense competition. There are also the regulatory hurdles, as space activities are heavily regulated and any slip-ups can lead to serious consequences. In conclusion, Momentus is at a critical juncture. The company needs to demonstrate its ability to execute its ambitious plans. It needs to show not just technological promise, but also solid financial management. What do you think? Is Momentus on the right trajectory, or is it headed for a crash landing? Leave your thoughts in the comments below. And if you found this breakdown helpful, don't forget to like, subscribe, and hit that notification bell so you never miss an episode of Corporate Decoder. Thanks for watching.